What's going on, everybody? It is Thursday, September 7th. Yeah. Not a whole lot to talk about today. The trend continues. We had a mixed day. NASDAQ down, S&P down, Dow off its highs. Dow basically bounced from an oversold condition. This could happen. We've had a number of down days, get oversold technically. A lot of people short, and then the market bounces up, but it's not going to hold these rallies. The other thing is, there's not always a story every single day. I mean, I know that many of you, or there are people out there, they want some explanation every single day. And the media will, they got to dig stuff up just to, put things out, put content out there. But there's not really a story every single day, especially, and this might seem counterintuitive, but during a period where the market is trending because of some embedded condition, economic condition, and let's call it right now what I've been talking about, which is the deceleration in these fiscal flows coming up to the tax drain next week. I mean, this is just like momentum. It's like inertia. It's like you have a set of conditions now that are just going to push the trend in one direction until it changes. So it gets almost kind of boring. I mean, it's one of the reasons why I have seen people, including myself over the course of my career, have a hard time holding on to a position, even though you maybe are positioned correctly in the direction of the trend. Now that might sound like self-sabotage, which it is, but it's almost human nature to be looking for the next shoe to drop. Like you think, hey, it can't be going this far. It's got to bounce, or it's, when it's going up, it's got to come down. I mean, that's kind of like psychology. And it's almost, I think there were studies done on that in behavioral economics. As a matter of fact, there were. And I'll give you an example. I taught a course a long time ago in behavioral finance back in New York City. And one of the exercises I did for the class was I took a guy, just randomly selected from the class, and I said, go outside in the hallway and write down on a piece of paper, take a coin, do 20 coin flips, okay? Write down the results of the coin flip, and then on another piece of paper, make up your own sequence of coin flips, heads, tails, 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 heads, whatever, 20 times. And I'm going to guess, when you come back in, I'm going to tell you which one is the actual and which one is the made up, all right? And so the guy went out and he did that, and he came back in, and I looked and I quickly pointed out which one was the actual and which one was the made up. And he was like astonished. And you know how I was able to do that? Because the actual had many more repeated events of the same result. In other words, it was like, it could have been like heads, 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 tails, heads, heads. And the other one was more like, the one he made up was more like heads, tails, heads, heads, tails. So it pointed out that we naturally think that a string of events, even though each event separately has the same probability, it's a 50% probability that it's going to be a heads, or a 50% probability that it's going to be a tails. But and over a long sequence of events, it's going to be 50-50. But there could be periods within those flips where you get repetitive same result many times. And this seems like, well, it shouldn't happen. But again, over a long number of events, of flips, it comes to 50-50. So it's the same kind of mentality with, why is it so hard to hold on to like a trending move? Is because it's kind of like in our nature that we think, oh, this can't last. It's got to flip around. It's got to flip around. So we kind of like, trip ourselves up with this belief. And it's a hard thing to work on. It's a hard thing to change. All these years of me being a trader, I mean, I've gotten a lot better at it. Don't get me wrong. But I still fall into that trap. And mainly it's with respect to my Forex trading. I don't do a lot of trading anymore. I do more investing and accumulation of assets, stocks mainly. But I do Forex trading, and I'm pretty good at figuring out what these trends are going to be, whether the dollar's going up or the dollar's going down. But I tend to fall into that same kind of self-sabotaging behavior. Look, I'm telling you, that comes after years and years and years of doing this. So if you do it, don't feel bad, but I would say work on yourself. As a matter of fact, one of the exercises I used to teach in my Forex course was I used to tell the students, like, stay in there, just stay in that trade, no matter what, even if it goes against you. Stay in it. I mean, you learn a lot. First of all, if you have the skills to trade out of a bad situation, let's say you get into a trade and it's good and it's going in your favor, and then it reverses against you. If you have the skills and the knowledge to trade out of that with, let's say, a break even or even like a small loss or a small profit, you should never be worried, okay? But to leave the money on the table when you've have been correct in anticipating a big move. I mean, that's where the big money is made. But most people leave so much on the table because, again, you fall into that trap of behavior where you think, oh, this can't go on. This can't go on. So my advice is work on that. Like, stay in it even to the point where you feel like you can't take it anymore. I mean, learn, that builds resilience. And just keep it in the back of your mind that, hey, yeah, well, maybe this is going to reverse on me, and maybe at the end of the day, I'm going to have to break even, whereas I had a nice profit. But a nice profit is not a big profit. And you should work on building that resilience so that you stay in it. So like I said, a good exercise is don't even pay attention to your position. Just hold it. Hold it. And if it goes against you, then you have the skills, hopefully. I mean, if you took my Forex video course, I teach the skills of how to trade out of something. And I've given you these, these anecdotes of my classes when I asked students, give me the worst trade you could possibly think of, unprepared, and I end up working out of it. Okay, so that's completely doable. So yeah, I mean, there's not something to talk about every single day, and a lot of times, like I said, these trends when you're in something that's being driven by some sort of major economic condition, then you just got to let it ride. I mean, you just have to let it ride. And you can't be thinking every day like something's going to pop up to keep that momentum going, to keep that trend going, to keep that story going. I mean, the media, that's why you just got to ignore the media, because they got to come up with something, because they got to put that content out. That's their business, putting out content. And a lot of these financial journalists, if you want to call them that, they're young people. They don't have very much education in finance, and even if they did, I go over all the time these very serious economists on Wall Street who have no clue. They see everything as a single variable event, and this is so ingrained, and this is the orthodoxy, and it's the way they see everything. And even these people with their fancy degrees, coming out of fancy schools, Ivy League schools, they're not any better really than these journalists. But just understand that the journalists, they have to pump out content every day. So they're looking for a story. They got an editor, And the editor also probably came out of a journalism school, and he's like, okay, that sounds like a good story. It's what everybody's talking about. So you got to ignore all that stuff. But really try to work on sticking with a position. Like right now, for example, I said stocks are going to go down till mid-November. Then we get a bounce into mid-December. Then it goes down again into the end, like the last week in December. So like, try to ride that out. I mean, that's like, trying to ride a wave. You're a surfer, you're trying to ride a wave, and try not to leave a lot on the table. It's hard, don't get me wrong, but that's where training comes in. I mean, anything that's new, and this is not even new to me, I've been doing this for over 40 years, it takes effort, it takes practice. That's all I can tell you. And the more you put into it in terms of practice, the better you're going to get at it. And that is really important, because you'll be able to get to a point where you're going to stay calm when things are going against you, because you have confidence, you have the tools. Worst case, if your analysis is wrong, if your outlook is wrong, you're going to get out of it, and there's always going to be another situation coming up at some point down the road. So try to work on that. It's very important. It'll help you a lot. It'll help you immensely, I'm telling you right now. So we got the EIA Weekly Petroleum Status Report today, another big draw in crude. The report, I have to say, was pretty bullish. We had strong demand in gasoline, strong demand in distillate, good exports, really good exports in both crude and product, and big draw in crude, big draw in gasoline. The only thing that we saw a build again in distillate, but now both gasoline is flat year over year, so that whole entire surplus has vanished. Crude is negative year over year, so that whole entire surplus has vanished. They're filling up the SPR again. That was up 800,000 barrels in this latest week. And it's looking pretty good. Big picture looking pretty good, but I've been saying, I think we're going to get a pullback in oil because of the equity pullback. I think it'll cool off some of the speculative activity. And again, like I said the other day, I'm very curious to see what producers are doing. When we get that CFTC commitments or traders report tomorrow, I'm very curious to see if producers have flipped it, to net selling. I know they're long, but they were net sellers, or let's say their net hedging position went up last week. I want to see what they did this week. Anyway, that's it for today. Like I said, not a lot to talk about. Trend is down. Try to ride that thing. Try to work on what I've been telling you, with that mental game, building resilience, and you'll be happy you did. All right, see you tomorrow. Bye.